Hey guys, Sunday, July the 7th, 2024. Let's see what the Black Widow has in store for us this week. But before I start, I want to say that I had a great time on 4th of July with my family. We got together with my wife's family and we cooked food. We ate a lot of junk food. We caught up with each other, catching up on what are you up to, what are you doing, and stuff like that. Worked on some music. The boys had a lot of fun. They got to play, did a little fireworks, and it was all good. Got good rest, and now I'm excited to get back in the ring, in the action of trading. Hopefully, you guys had a great 4th of July, whoever celebrates it, because I have people from all over the globe following my channel. So, especially for the US people, hopefully you had a great time with your family, friends, and loved ones. So without any further delay, let's get into the charts. So July 3rd is one of the seasonalities that I watched where it was indicating on average between the 5, 10, and 15, possibly a turning point here. And so far, this didn't pan out. I had my stop around 239-ish, and I got stopped out. If you saw my last video, it was one of those trades. It's either going to work out or it's going to take me out. And it took me out. The Black Widow continued pushing lower. So if you recall that 258, remember that $2.58? I could probably minimize this. The one by one. We already cracked that, so now according to Gann's theory, but once we went to below 258, now we on the weak side in regards to geometry. So now this is where the bears could probably take advantage and push lower. So I'm starting off with the Elliott wave theory, and this is the weekly chart, and it's indicating anywhere around 218. This could be a possible wave 4. We already broke through one of these little X's here. We got the green one and the red one. Once we close below the red one, something is not looking good. It could be a high probability that we could probably test this low, but I'm just kind of speculating. This is what these little X's indicate. So in theory, if this is a wave 3 on the weekly, wave 4, we should be working on a wave 5. But I know some of you think, well, maybe this is the first one, working on a 2, going on a 3, and that's very possible. But I'm just going to go on what the chart is indicating. And you see the Stokes. Yep, those are the Stokes. They just had the crossover. But they're not in negative territory yet. So let's see what the daily chart, and let's see, we're below the 50 and we got the 20 SMA somewhere around, you could say 215. Let's look at the daily chart, and the same thing applies for the little X's. So we're below there. We still got this one here, which is somewhere around 223, and we got the last one around 212. It's already indicating a wave 4. Oops. It's already indicating a wave 4. Now we just have to wait for, because we already hit the projection lines or targets. Now we have to wait for the reversal. Seasonality wise, here it indicates July the 8th. So it's kind of choppy here, and around July the 8th, it goes up. This remains to be seen. We have to wait for the reversal now. I went and gave it a shot July 3rd. That didn't work out. So now my next strategy is I have to wait for the reversal. Now we could estimate and calculate and do some probabilities of possible turning points, which I'm going to be doing, but we have to wait for that reversal now. So if it happens on some dates that we've calculated for high probability turning points, oh, good. Then maybe that could be it. But we have to wait for price action to confirm it. So that is the strategy, because we are below the 1 by 1, and we're in weakness, kind of bear territory. And we can't play with the Black Widow because she is not going to play around with us. So Looking at the Stokes, we are very, very oversold at the bottom. We don't have these black lines yet, but if we consolidate here, maybe that could be a good sign for another leg higher. A couple of things I want to show you. The timing clusters is indicating anywhere between the 3rd and the 10th with a high probability of the 8th for a possible turning point, which lines up with the seasonality here. If this coming Monday, Tuesday doesn't work, then next week, which anywhere between 7/16 to 7/22 with a high probability leaning on the 18th could be a turning point. So even if we just go sideways here and then on the 18th turn, this is indicating that. The Stokes are negative. If we put our fibs, you see that we already cracked the 50%, which was 238. The next one is 61.8, which is 220. So that's that. Let's nothing on the Gann. Let's put our linear regression channel. We cracked through that. We cracked through a target I had of around 236 and pushed lower. Could this be a bear trap? I don't know. We'll see. If we can regain this area of 239 all the way to 242, maybe this is it. But we don't know yet. We got, using the domino effect, July 3rd was one, and then we have here on the 8th, and then we have a couple of more coming up. Now, worst case scenario, let's not get to the worst case scenario. We got the ellipse technique on the 11th. It lines up with all of these right here for high volatility. Not that it's a turning point, it's more of a high volatility. And here's some targets with the ellipse. And this is like the really ugly part. If it gets down there, we have a target of 194 all the way to 188. But we're very, very overextended. So I think we're close. I'm not just going to buy now. I got to wait for that reversal to happen. I got to wait now for price action confirmed it. I probably went ahead of myself and got stopped out. So that's fine. Minimize damage. But now we have to regain, there's some things now that have to happen to see for this reversal to like really play out. So I wanted to cover that. Let's go into our other charts to see what we have there. Okay, so this is one of my fractal charts that I focused between the October 27 high of 363 all the way to this February 20 low. And there's a couple of things that, jump out at me. First, we are below the 1x2. Second, we fail the 1x1, which is on a scale chart of 2. You could say around 258, 259, 260. And we're coming now into the, so this is a 30, 45, and this is a 60. And let's say Monday the 8th, if we get down here, that will be somewhere around 221 upward because it's a slope. So want to keep an eye on from 221 onward. That could be potential support. On the Gann square, you can see that we are already kissing the 1/4 level, which is 232. We know 233, 232 around there. That's the 0 line and the square of 9. And if we failed that, the next level will be 223. And on the 1/6, in regards to timing vector points, there's a turning point here on the 8th. And there's also one coming up on, or possible turning points, not that we don't know yet. So this is what we're trying to watch. It's the 8th and also the 22nd. So those are the two turning points. In regards to level, these are the ones you probably want to watch. 223, and we're right now hovering around 232, 233. Interesting to note that if you look at that pivot low right here, we're kind of in that same ballpark right now, right there. See that? Oops. See that right there? Right there. That's that area that you want to keep an eye out if that holds. Next thing, let's see. The ellipse that you want to watch will be also the 23rd, 24th, around there. There. This one we had an ellipse 626, and it just fell apart. So what's interesting about the geometry using the circle or the ellipse, however you want to call it, is that it wasn't a turning point to go up, but it was a turning point in regards to the continuation downward. So it could go either way. It could either explode or like a turning point going up, retest as high, or from here, just what had just happened now. That's this 45 that we failed. So now we're in weakness, more on the bear side. Nothing there. There. So this is big picture. You want to keep an eye out into the future of 928. That could maybe, if we continue grinding higher, that could be a possible turning point. But from here we go down, working on a wave 5. We just never know. But you need to start looking into the future into that. And those ellipses, I got them from 2 points, from the consolidation ending point and from the low of February 20th. This one takes us all the way to November. And somehow from here, it starts getting weak in regards to natural gas. It gets a little stronger here, but then it just starts getting weaker. We just got to see which one is going to play out. And then lastly, this move from here to here was 112 days, and now we're pulling down. So from this angle, this is a 45 right here. This one I want to watch to see if it continues for a possible bounce from the 45 from this angle. So that starting from the 8th, anywhere between 221, pretty much, yep, going onward. We find some support around there. It could potentially bounce. Okay, so this is a seasonality chart, and you can see that this red one is a 3-year, this one's a 6-year, and this one lined up with the one I showed you at the beginning of this video, around 7.2, 7.3. It kind of pops, but natural gas, the black one, the Black Widow, has been pushing lower. So far as I've been ignoring this one. This blue one is an annual one, and this one bottoms out on average around the 11th, 12, around there, 10. You can see that from here, I guess this nice little pop, maybe to 813, or maybe to the end of the, I don't know, the end of the month, around there. We'll see. But this one says all the way to August 13th. Get this nice pop, then it pulls back September, and then it kind of rallies. So they're different from the 3 and 6 year seasonality. The last one, this is the annual decimal, and this one bottoms out somewhere around the end of the month. And kind of get this little pop into August, and then down into September, and then this rally. So the annual and the decimal are kind of in sync. These are early seasonality, and these are, 1 year and annual and decimal combined together. And this is an average, this is a solar cycle, and you can see that from here on, it kind of bottoms out, kind of sideways, grinding higher all the way to like August 18, and then it gets a dip. And then you get this rally, which confirms this right here. Here in this clip, I'm going to show you 3 things, maybe 4, maybe a couple more here. This is the annual cycle. As you can see, we hit a peak around here, and then another peak around here, and we pull back. Now we have a turning point coming up around the 3rd, which just passed, and then a turning point of August the 31st. So let's see, we have a reversal, and this plays out. This is all speculation. In regards to the neural net, there was a pivot high or a possible turning point on the 3rd, and we continue pushing lower. So is this a bear trap? We don't know yet. Let's see how this week, where we close. But dates using the neural net will be August 1st and August 9th. So if we turn around here and go up, look for a possible swing high August 1st or maybe August 9th. Those are the 2 ones that I'm watching. I mean, it could probably even go to September, but let's just take baby steps. So those are your 2 important days using the computer. But it all depends on direction. So if we go up, these are probably going to be possible highs. If we continue going sideways to lower, these could be possible turning points to the downside, where we could probably turn around maybe August 1st. So we just kind of go lower to sideways or sideways, and then maybe a turning point up. But if we start going up, then look at it as possible highs. That's how I would use this strategy with the neural net. Classical, the Bradley model. As you can see, we have the 7-4, and you could kind of say maybe it's still early. We'll see what Monday brings, today and Monday. But if we have a turnaround here and this thing starts grinding higher, then watch out for August 17th. To the upside. Now, if this continues going sideways, grinding lower, or just sideways, watch out for August 17th for maybe a turning point to the upside. So it depends where it's going. If it's just sideways, turning point. Now, if it's going up, possible turning point from the upside. And then lastly, using the Fourier, you can see that we have a crossover within the projection line and the the overtones, and you see 17 pops up, and this is from different swing points, and I think maybe it's different settings I have. So watch out for 716. This is another one, and you can see that right here we have a crossover with the overtones on maybe 7-9, 7-10. So keep an eye out for that. And this last one, there's a crossover here. It's like two. There's one on the 8th and then one on like 9/10. So 8, 9, 10th, very hot. Perceived for a possible reversal, but early to tell, because we don't know yet. So we have to wait for price action to confirm it. Okay, so this is the last clip. As you can see, I'm using my market profile. I'm using the 3-month. This is the area that I thought was going to hold, lining up with seasonality for a turning point, but that didn't play out. The bears were aggressive. The Black Widow kept pushing, and we already kissed and even closed lower below value area low of 235. There's also one here around 221, and this is our anchored VWAP, which is lining up there. See, this is the area now that I'm watching. Since this one didn't work out using the 3-month, now we're going out to the 1 year, and that covers anywhere between 213 all the way to 229 with the value area low around 220. So this is an area you want to watch. I might have to put a little shaded area here to see if we hold. The only positive day we had was July the 2nd, and then the 3rd was bearish, the 5th was bearish. You can see that they're still pushing lower. If we put our retracement, you can see that we are right about the 50%, which is 234-ish around there. We're just hovering around there. So let's see if this holds. And if we kind of go sideways, chopping around here, that might be a good sign until the right time comes where it could potentially turn. But we have to wait and see if this is going to go sideways here, or they're going to push it lower and somewhere find, some kind of consolidation pattern going sideways. Looking at our simple glance chart, you know what, let me delete this here. It's a little ugly. Nothing on the monthly. On the weekly, we cracked the mobile band, which is not good. 236, we closed below it. So now everything over here is going to be red. So if you're bearish and you're short from here, I probably recommend you still hold on to it until you see a reversal. But the MACD is still negative on the weekly. And we're very ugly in regards to the weekly. There's two support here, S1 at 228. And also 213, you got the 20 SMA down here. And we never got above the cloud. On the daily, it looks a little different. Let's open this up. We're now below the linear regression channel. So now this is like super dollar store discount. But it all depends on risk. If you want to wait for the reversal to happen, then just because this is a discount area, don't get in yet. Wait at least for the reversal. MACD is still negative. We took out some key levels here in the cloud. 245 all the way to this 237, which is this one. This is the 237, 245, and then you got this last one right here around 225. Now you're in the cloud. And you took out the 50, the 200, the 20. You got the 100 down here. You got value area low around 215. And you're pushing down in the TD9. We're at 6 right now. So 3 more days, you'll be on 9. And then we have our indicator of 9 showing up. That may be possible turning point. But so far, very risky right now to buy until we get some confirmation for a reversal. Let's go here. So there's a couple of things. I added some new things I wanted to show you. First off, my SO. So these are a technique I use when we have a defined turning point right now, which is our 611 high of 315, right? That's the number. Yeah, 315. So you got your 7-8 coming now, which is Monday. Maybe a turning point here. If not, we have the 16. So if we go sideways or just kind of sideways to lower, 16 could be another possible turning point. We have our midpoint, which is A2, August 8th. We got the 19th, the 28th, and the last one is September the 23rd. So these are my now timing points calculated from this high to see how this is going to play out. So this is one that I'll be monitoring. Even if we just kind of go sideways here, maybe this could be just a trading range that we could go in. But I'm kind of leaning maybe we'll pop, but we'll see. APF, this was another key level that I was thinking that we're going to bounce, but the midpoint didn't hold. So now we're pushing lower. We got the 25% coming down here. So let's see if it's going to put pushing lower, if this is going to hold right here, but it's unknown yet. Channels, same thing. You got this high from here that it can either find support here or here, and that remains to be seen. So now we are now waiting to see where is going to be this reversal. These are my FT levels, key levels, and we took out that one. The next one is between 225 and 228. That if it gets down there and I see a reversal, maybe I get in. But this is one, and then there's one all the way down here. So it could be between these two if it's going to turn using this technique. I don't think there's anything there. Actually, you got this low right here of 223. That's where we found that low here. So yeah, so this could be potential bounce. We just don't know yet until we get there. 3.5 high. Yeah, you see it's a pivot here that I'm watching, and we just there. So we'll see if that holds. There's nothing there. Let's see. Gap fill, something it's on my mind still. You know, it could probably be an A, B, C, fill this, and then go. You never know. That's if that's going to play out for the gap folks. Measured move. I mean, these are measured moves to the downside. And you got one at 208, 175 in regards to timing point. Let's see what we have here. Yeah, we already blew through the next one will be 712. So if it kind of goes sideways lower or just sideways, 712 could be a possible turning point. 722 all the way to 723, even 726. So those are I should probably put markers just to see. Because it could either be price levels that it could go down to or turning points. And I look at both of them. Trend lines, I don't think there's really nothing there. I think that's it. Yep, I think that's it for now. We'll leave it at Andrew's Pitchfork, APF, and let's go to a midpoint chart and see what levels we should be watching on top of all the ones I've showed you. So the big picture ones, you have one right here around 225, and you can see that the cloud now, the mobiles are starting to get red. So we got this nice little correction. You got the 50 moving average. You got this level using the midpoint chart. So this is the yearly midpoint at 225, and the mobile is getting, now it's in the middle. Stokes are just falling apart. So that's to be the big picture level, 225, to see if that holds. We go down using the monthly pivot levels. This is pretty much very overextended on the monthly. This is 228 for possible support. And you can see that now the mobiles, which is kind of early, kind of gives you an early signal that now maybe potentially this week it could turn, but we got to wait for the reversal. But this is giving you clues. This is one of the ones that I like to use. But in regards to level 225 and 228, this is monthly. This is a weekly level, and you know that the purple one, we failed that. So now looking for next week. If it's going to continue pushing lower, if we take out, what is this level, 231, then possible targets for next week completely. The whole week is 224 all the way to 217. The last one for the whole week will be that one. Now, if we're going to go bullish next week, we need to get above at least 245. This is the line in the sand, your midpoint for this week coming up. 225. We need to get above there. But that's the line in the sand for maybe indicating that the reversal's in, you're above the midpoint. Start looking for higher price targets. But the MOBO almost cracked, but still in. So I don't know. It's kind of in there. It's interesting. I thought it was going to push lower, but it's kind of in there. So we need to break above this MOBO band of was it minus 0.08 to get something. But so far it's still positive. So we got to see if this is it for this week. And using the daily as a pivot on a 1 hour, you can see that we made a low at 231. So for tomorrow, line in the sand will be 237. In the overnight session, if we could, bounce off of that and go there, that's a good sign, because at least on the daily, you're above the midpoint, which is 237. Then we'll have to hold that and continue grinding higher. But if we fail that, so tomorrow, this is the line in the sand. In regards to statistics, it's kind of mixed. There's one that shows that it's negative, and then there's one that shows it's positive. So it's 50-50. The one that's negative is that you lose money on Monday, but the positive one is that statistically it's a positive day. So let's see how Monday is going to play out in regards to the statistical calendar. And in regards to average return by week, this whole week is positive in regards to natural gas. Average return by week, meaning that it's positive. That's what the data is saying. So could it be possible we have this turning point now? I don't know. But the data says that the average return by week is positive. Monday statistically is positive, but in regards to making money, it shows negative. So that's like it's not lining up together. Anything else? I think that's it. We could look at the square of 9, and we know that this is we went as low as 231, and on the retracement between the February 20th and the 6/11 high, 233, 234. That's your 50%. So this is like your midpoint in regards to the square 9. So if it's going to just kind of go sideways around here, we need to close above 239. And 237 is your midpoint for Monday. So that's this. So we could close above here. It's a high probability we'll at least get to 241. So it's it's probably going to be, it could get as ugly as 289, but it's probably going to be in this area where we could probably be consolidating, just going back and forth until we could break 241. If we could break 241, we could get to 249, and then it could probably go like this or like this. But right now we are on the 0 line, so we're going to be probably in worst case scenario 289. I'm sorry, 289, 226. Or 225, sorry, 225, yeah, not 289. Anywhere between 289 all the way to 241. Yeah. And worst case scenario 218, but I don't know, we'll take baby steps. So but this is what I'm going to be looking at. I'm going to be studying the charts a little more too, because I'm finding some different patterns that I'm noticing that I haven't noticed before. So when I was with the family, I was catching up on some Gann theory and reading some of his courses and started, back testing some things, and I found something interesting that I haven't used before. So I want to see if that's gonna kind of play out for in the next couple of weeks. But I know this was long, but I just wanted to kind of catch up. I am on the sidelines. I'm in the camp right now that within the next 2 weeks, maybe this week or maybe next week, we may have a reversal. But I am going to now play the defensive, and I am going to wait for that to turn. I'm waiting for that reversal to happen, and then see that once that reversal happens, when does it happen, and at what price does it happen, and if it all doesn't make sense in regards to price and time, using Gann's theory, and then maybe I'll look at Elliott wave. But in regards to the daily chart, Elliott wave is saying we're in already a wave 4. We just have to wait for their reversal. And on the weekly, it's saying you could probably go potentially down to 218 for a wave 4. So I don't know. We'll see. We'll see which one of the theories and techniques is going to play out. I'm going to sign out. Hopefully you have a great weekend, and I'll keep you posted on my thoughts on that gas.